Well, hello and welcome back to Cyboss TV. I'm Daisy McAndrew, delighted to be your host on this, the last day of the convention. The week has gone so fast. Now, this morning we've been doing a lot of globe-trotting. We've been looking Chinese currency, we've been looking at India. We're going to continue along that theme with our globe-trotting, looking at South-South trade. Delighted to welcome my guests who will be discussing this issue with me in just a moment. To my immediate left, good morning to Clarissa Dan, Editor of Trade and Forfeiting Review. Hello and welcome. Steve Beck, Asian Development Bank. Good morning to you, Steve. And bringing up the rear, John Calverley, Head of Economic Research at Standard and Chartered. Very much looking forward to hearing all your opinions on this issue. But first of all, we want to play a video that we've got from, this is on Africa's rising middle class. This is the view from the senior political economist Simon Freemantle. He's from Standard Bank.
So what we're finding in the last 10 years is there has been a structural shift in Africa from the pre-2000 era into a time when economies are maturing, political systems are deepening and becoming more reliable and robust and legitimate. And the ability of these economies to grow in an environment of enhanced stability has allowed incomes to ascend. So we find population growth is being met with income growth for the first time in Africa's post-independence history. So we're finding across 11 countries in sub-Saharan Africa that we looked at, and for the study it includes Nigeria, Angola, Ethiopia, the larger markets, faster-growing markets like Mozambique and Zambia. The middle class since 2000 has tripled in terms of the number of households included in what we would define as a middle class. So these effectively households earning more than $8,500 per year of consumption on an annual basis. In Nigeria, roughly half of the households across the 11 are in that market alone. We're finding that income growth is fairly compelling. It's built to the point where there's scale and immediate compelling opportunities for investment from a consumer perspective in many of these markets. But the view is even more compelling looking out. So for the next 15 years, we expect that the middle class in Nigeria will go from about 4 million households to more than 20 million households. And that's a very deep and rising consumer opportunity in the context of some of the developments we're seeing in urbanization and income growth in key urban corridors throughout the southwest and the southern part of the country. So that's clearly being driven by the broader maturation of the economies. In the 11 countries, GDP in 2000 was $120 billion, very small. At the end of this year, it'll be just over $1 trillion. So a compelling and fairly scalable economic opportunity, which is arising out of the fast-moving frontier African markets. So typically, Africa has exported most of its products to Western Europe and the United States. And some of these trade patterns have been even exclusively located to former colonial powers. So Francophone Africa sending most of its product to France, elsewhere. That's changed fundamentally in the last 10 years. It's been driven largely by the growth of the emerging world and the increase in demand for largely natural resources, which is the bulk of what Africa exports. But it's also been driven by a contraction in demand since the 2008-9 crisis in Western Europe and the United States. So before the crisis, the United States was the biggest importer of African goods, largely crude oil, base metals, but some manufactured goods from South Africa and elsewhere. That trade dropped off a cliff in 2009, and in 2010, China overtook the United States as the largest individual recipient of African exports, and that trend is now carried on, and we expect will probably be continued for at least the next 5 to 10 years. The United States' drive for energy self-sufficiency means it doesn't necessarily need the same amounts of crude oil from Africa as it did before. India, its demand from Africa has meant that in 2000, trade with Africa was about $5 billion. Last year, $75 billion, a tremendous growth in trade with that economy. And perhaps finally is South Africa. At the heart of some of the growth that we're finding in demand in the rest of Africa has been in a very aggressive pursuit of South African companies to expand their products into these growing markets north of the border. And the rest of Africa provides the only area in the world where South Africa runs a trade surplus, and a very meaningful one. So this compelling, Africa's been at the heart of some of this reorientation of trade from a unipolar world, where it was largely traditional developed markets, to a multipolar environment, including the BRICS, including fast-rising dynamic EMs. And now China, India and others are in the top 5 trade basket for almost all leading African markets.
Goodness me, there was a lot of information in those few minutes from Simon, wasn't there? I mean, the markets are changing so fast in this region, it's enough to make your head spin, Steve.
Mm-hmm. Yeah, I think that the dominant driver for South-South trade really is intra-regional trade. In Africa, 10% of African trade is intra-regional, but in Asia, almost 60% of Asia's trade is within the region itself. And I think that's set to grow. If you look at foreign direct investment into Asia, that's coming from other Asian countries, and typically that leads to more trade. You've got ASEAN economic community that's going to be coming on stream fairly soon. There's the fast-growing middle class that was referred to earlier in Asia and other emerging markets. That's going to mean that a lot of these goods end up within the region. And I think that there are a lot of practical reasons for people to want to trade within their region as opposed to cross continents. I'm not suggesting we should give up on cross-continental trade. There are huge opportunities there. But what we're starting to see is that the dominant South-South flows are interregional.
John, is that the way you see the world mapping out at the moment?
Very much so, yes. I mean, the fastest growing trade corridor in the last 15 years has been Africa to Asia. A lot of that originally was based on commodities out of Africa and manufactures from Asia back into Africa. I think that's changing, though. We're beginning to see more trade within Africa as countries get a little bit more integrated to get better transport networks. But also some countries in Africa are starting to be manufacturing centers themselves. And I think that's the long-term future, the so-called flying geese theory of trade, where what happens is the leading countries find their costs get too high and they look for cheaper places to produce. So you go from Japan to Korea to China, now to Vietnam and Bangladesh. And I think eventually you'll go to Africa because that's going to be where the costs are lowest.
Clarissa, from your perspective, how does this fit into an even longer term trend? Where's it all heading?
Well, when I last looked at the WTO statistics, we had 8% of global world trade, that includes intra-regional trade, 8% of that 20 trillion, which is what it is now, was South-South. That has risen to a massive 24%. 2011 it was 24%, and the WTO reckons it's going to push on to 40% by 2030. In fact, the room of all our delegates in the room yesterday reckoned it was going to be as much as 50%, didn't they, guys? So that was quite surprising for us, but that's the trajectory.
But call me a party pooper. But in some ways, that level of speed, that speed must bring dangers with it.
It does, and one of the dangers is, can financing keep up? 80% of world trade is financed by some form of trade credit, and the South-South region is a tad risky. The big themes of this year's SIBOS have been KYC, AML, that's a good one. But the regulatory concerns are loud and clear. And so how can banks get their liquidity through to these exporters and importers that desperately need financing, yet cover off their risk management?
Would you agree about the risks entailed?
Well, I see more opportunity. I mean, I think we've seen a tremendous number of people being lifted out of poverty and their living standards raised in large part through trade. We've certainly seen that in Asia, Latin America, and elsewhere. So I think the possibilities, the prospects are enormous. But we have a fundamental disconnect between a globalizing economy on the one hand and political structures that are not globalized. And we see that in a more sort of micro scale reflected in problems with AML KYC requirements, for example, where different jurisdictions are requiring different requirements. And as a result, there's a huge burden on financial institutions to comply. They're reducing the number of relationships in emerging markets, and this is impeding the ability of financiers to support more cross-border trade. So there are real challenges.
John, obviously the regulatory, sorry to interrupt, Steve, the regulatory landscape has been a very big theme of this SIBOS, but I'm guessing it's a difficult area when we're talking about South-South trade.
That is probably the most difficult area because many of the countries are more difficult to deal with, and very often you're talking about smaller companies where there's less information. In some cases, the companies themselves are not very transparent, so that is difficult. But I think we have to start thinking as banks of this being what we do. It's not simply that we take credit risk, we actually take operational risk and, if you like, regulatory risk. That is what we do.
Clarissa, you were vehemently nodding there. Do you think that's going to bring with it a cultural change within banks to do, as John said, this is what we do?
I think that cultural change is already underway. I've had some very encouraging meetings over the last few days, and they are recognising that they need to do things differently. The initiative of the SWIFT KYC register is fantastic. That will gather momentum, and banks will need to support SWIFT and getting their data into that. Steve started up through ADB and with the ICC Banking Commission the risk register, and again, when that data gathers momentum, that will help. And technology is also doing its bit. Marcus Treacher in the corporate forum was talking about how mobile technology is going to be key to getting these payments through.
Yeah, I couldn't agree more. And as John is saying, information, access to information, the sharing of information among banks is really key to supporting and underpinning more South-South and global trade. And if banks can harmonize their systems, standardize the collection of information, the possibilities to collect megadata and generate information that would enable financiers to understand their risks, assess those risks, price those risks, opens up, it could really be transformative.
But with these markets growing so fast, that must bring with it a heightened sense of competition to get your chunk of that market, and that heightened sense of competition presumably doesn't lend itself to that interbank collaboration and harmonization.
Well, I think the rapid growth is a big opportunity, and of course some banks are pulling back, so I'm not sure that there's necessarily a problem there. I think also as these markets grow, it becomes more worthwhile to put resources into understanding them and dealing with them. So I see this very much as an opportunity.
Yeah, and I think that sometimes people are inclined to think of trade as a zero-sum game. It's not. Exactly. It's about enlarging the pie, and that's what makes it so exciting. There was a Pew study that was reported in the FT a few days ago, and it reflected very much a north-south divide in terms of attitudes to trade. And by and large, it said that the northern hemisphere sees trade as a threat, whereas the south sees it as an opportunity because, as we discussed before, millions have come out of poverty and so on as a result of trade.
I would very much emphasize that, yes. I think almost all emerging markets now see trade as the key to development. So it's very much a strategy now of governments to promote trade, but also within countries, as people become more aware of what's outside, they want to see more imports. So it used to be mainly the vertical supply chain, but I think it's going to increasingly be horizontal trade that we see between emerging markets.
And Clarissa, are there individual countries, individual governments, individual regulators and policymakers who are really doing this superbly? Are there sort of gold standards to look at, do you think? Are there differences between the different countries and their attitudes?
I think there is a huge difference in regulation within the region, and another of the themes that have come out of SIBOS is the need for regulators to actually work together and to standardise and to come up with a level playing field. That was something that was picked up by Jamie Ferrez in the opening,
yes.
In the opening plenary session. That very much plays out in South-South trade. And don't let's forget that we've got some wonderful initiatives coming through from the export credit agencies. I'm doing some work with the African Exim Bank, and they're working with local banks and with global banks in just trying to get this liquidity through, particularly to the SMEs, because they are often regarded by quite a lot of financiers as too risky to finance. But with the right platforms, with the right technology, it can all be done.
Absolutely. Well, maybe looking forward to this time next year, SIBOS, and we'll be discussing, I'm sure, this subject again. What developments do you think will have happened over the next 12 months? Which countries or which areas, which trade blocks would be particularly in top of people's minds, do you think, John?
I think what we're looking for is an expansion of trade. I mean, it's been very disappointing the last 2 or 3 years how slowly trade has grown. And some of that is because Europe has been in recession. Some of it's because manufacturing has been very weak. So the WTO is forecasting an acceleration in trade, and that's what we'd expect, but that's what I'm most hoping for.
Steve, what's your crystal ball gazing predictions?
Well, I think there's a real sort of conscious effort developing in Asia to foster some more relationships with Latin America. I was at a conference a couple of months ago that was organized by the Thai government and ASEAN Chambers of Commerce that were bringing in Latin American governments to talk about how they could create more trade between the two continents. That's interesting to watch. ASEAN gradually come on stream. That'll be interesting. To see what happens in the South China Sea. Hopefully there's going to be some positive talks, because even now I think that sort of difficult situation is impeding the maximum potential for interregional trade in Asia. So a lot of interesting things going on now. We live in interesting times.
Clarissa, you're an editor. What do you think you'll be editing most about the next forthcoming year?
I think it's the pace of innovation and looking at reverse innovation. For example, the RMB, which we're having a session on later, is an example of that. It really is. And some of the great things in terms of inventions were taken through into developed economies from developing economies, and I think this will be a real opportunity to see some of this unfold.
Well, it's exciting times. Certainly things are changing at a great pace, and I thank you very much for joining me on SciBoss TV. Thank you to John Calverley, Steve Beck and Clarissa Dan.
Thanks very much.
Many thanks. Well, that's it from SciBoss TV for just the moment, but we're off to talk all things innovation and InnoTribe shortly, so do join us then. Bye-bye.